What's going on, guys? Wanted to do a little technical analysis video for you, and yes, you can't see my face, I know. I wanted to try this out, something I don't need to get dressed up for, I don't need to look pretty for you, I'm just here to show you some charts. I think this is something I want to try to do more often. It's something that is valuable to you, right? It gets you ready for the next day. I can't promise that I'm going to do this on a daily basis, but it's something that we can review the markets after the close, after the day, get ready for the next day, look at some technicals on the futures levels, on the SPY and the QQQ, get an understanding of where we need to either break or hold above, right, for the markets to have a nice move that we can profit off of. So let's just jump right into it, right? No intro, right into the charts. Let me know if you guys like this. Let me know down in the comments after watching today's video. Do you want some more just raw technical analysis videos, no fluff, right to the technicals? Let me know down below. Press that like button if you guys do enjoy the video as well. Let's jump into the chart. So here's the S&P 500. This is the 1 hour chart, and we really have two major levels, two major zones that have been controlling this market. We have a very clear 55.10 to 55.18 demand, which has been right here, and we can see that the market has very clearly attempted to maintain this level. Right, this level was a previous rejection zone back here in the beginning or middle of June. We had rejections. We got above it right here, and ever since we broke above that, we came back down to retest that level, right? So we've done a very nice job so far, and the markets remain very bullish in my opinion because we have been able to maintain this previous rejection point as a support area or as a demand zone. This is very key. And as long as the ES is above this zone right here, the market should remain relatively bullish, right? That is going to be the level that we need to watch moving forward to know whether the market is in a bullish situation or a bearish situation. Can't talk. Sorry about that. So as long as we're above that 55.10, 55.18 zone, which is right here, I really don't see the reason to be looking for downside on this market. Now, of course, there is that supply zone above, and there has been downside opportunities intraday on scalps off this level right here, right? And this level right here was a previous high right there on that big push. This is back on Monday, the 17th. We had a rejection of that 55.60, and we saw that this turned into a short-term support here, which ultimately failed back under, right? So we can very clearly see the market has respected this 55.60 to 55.50 zone over the last 4 trading days. We have been in just about a 40 to 50 point channel on the S&P 500 the entire week. We've had scalp shorts, right, off our supply, and we've had scalp longs off our demand. And we've been trading overall just in this channel. Now, I am leaning on the bullish side here because we are still in a uptrending market. We know that from the long term, and we are maintaining above these previous highs. We are keeping a bullish market structure. So eventually, in my opinion, if we are above this zone and we continue to see those buyers step up here, my opinion is that eventually we will see this squeeze higher, we will see this hold, and we will get that continuation on the market. But there has been no merit and no reason to take longs hoping for this entire week because why? Because we are still trading below the supply. So coming into tomorrow and coming into next week, it's going to be crucial to pay attention to whether the S&P 500 can break and hold above this 55.60, 55.50 zone. If you start to see this form, whether it's tomorrow or next week, this is likely going to be the catalyst or the technical hold that really pushes this market higher. So this is something I wanted to make sure you guys are aware of, something you need to have on your charts, this 55.60 to 55.50 zone. If we do get a break and we do penetrate over this level this week or next week, that is going to be the very important breakout that I believe really sets this market higher, right? So make sure you're watching this level, but the same side, right? And you have to stay unbiased here. We could see tomorrow another rejection here, trade us back down into demand lows, which can create another long, right? And we could end the week in this channel still. That's something to be aware of. Now, on the flip side, before we get past this S&P 500, I don't want to just talk about just bullish things, even though I do like that this is holding. If at any point in the future here, guys, the market does break below that 55.10 and does turn this green demand zone into a rejection point, then that is ultimately going to be the reason why we slide lower. The next level I'd be watching is the 54.90, and then below that, the 54.70. And the other thing, of course, that we're always watching is that daily 20 SMA, which is floating right below current action. So this is the S&P 500. It's a very clean read, right? The market has given us a really, this is a sort of a gift, right? Because look at how clean this technical structure has been. We've had those previous highs, which has turned into new lows, right? And that's a very clean structure. And I have been bullish pretty much all week, taking longs here and there off this 55.18, 55.10, and it's created great scalps. But the key thing here, guys, is the mindset. The mindset here has to stay we have to continue to just trade this market short term in this scalp range, because if we take longs off this demand zone and we're looking for too much, we're getting too greedy, looking for breakouts, that has not happened, right? So we have to stay in this mindset of just longs off demand and shorts off supply until we get, possibly that ultimate breakout or that breakdown. But I wanted to make sure you knew this, because if you do spot this breakout or you spot that breakdown, right, under this level, you need to be ready and you need to be prepared to take that type of trade. So that's the S&P 500 futures. Let's go ahead and move on to the SPY ETF. I'll go ahead and take off this after hours gray area, and you can see the SPY ETF is very similar, and right now in the after hours, peaking above the major rejection point. So very similar in regards to the demand below. We can see right here, we have that very clear zone that has maintained on the SPY. We had those previous highs in this zone between that 543.50 and 542.50. We had previous major rejections in this zone, which has structured into a very clean demand right here, right here, right here, right here, right? So a very bullish thing going on in the SPY still. There has been no material breaks on this structure. And until that structure breaks, you have to stay bullish in the long-term trend of the market, which has very clearly been higher. Now, right here today, you can see that we closed at the highs right at that supply. We have not seen this entire week. This is slightly different, right? Every other day this week, we saw the test of that level, but we rejected it and closed near the lows. This time around, you can see we bounced off that demand once again, but we closed at the highs, which is very interesting in terms of tomorrow and in terms of next week, in terms of this breaking out potentially on the SPY ETF. So tomorrow, what I'm going to be looking for is, do we hold above that 546.50? And if we do, that's going to be a key technical hold for me to look for more upside. And the next upside move for me is right up into this 548.50, which is that high right there, and those rejections from Thursday of last week. So tomorrow on the SPY, guys, you're going to be watching that 546.50. If we're holding above that, this could be a nice breakout and a nice structure change here on the SPY ETF. Now, of course, if we open the day and we're under this level, then we could simply reject once again, trade back down to that major demand, which we can look for those scalp longs again. But I wanted to make sure really the reason I wanted to make this video is because there's a little sign here that this might start breaking out of this major rejection point that has been very clear this entire week. Next, I want to go over the NASDAQ futures and show you guys what's been going on in the NASDAQ and the very key demand hold that stepped up yesterday and maintained itself today. And that is 19,900. 19,900 right here. 19,900 is the level that was very important for the NASDAQ futures. And why is that? That is right here. Previous highs, 19,900, turned into support, 19,900, which caused the upside move. We came back down. We tried to hold it here. We failed it. After failing here, you saw some downside come in, down into the next demand, which is this double bottom right here at 19,750. That 19,750 held very strong Tuesday morning, and it reclaimed the 19.9. And yesterday on Wednesday, we held above that 19.9 again. So we have reclaimed this 19.9 demand. That is a major win for the bulls, right? Getting back above these highs, back above that Monday low, back above that 19.9 level. And you can see today and yesterday, we tested that 19.9, and we have pretty much rallied straight up off that level. Now, to the upside, there is a crucial level here that needs to be paid attention to that rejected today, and we closed at today as well. That is 20,085. We can see right here, 20,085, 20,085. And if I go into the 5-minute chart today, look at the 20,085 fail today. We had a little peak above it, failed. Little liquidity grab there, little failure. 2085 failed. After we got under that 2085 right here, look at the downside that came in. All right, so tomorrow, 2085 is going to be a major watch, and you can see that we closed the day right at that level. So going back to the 30-minute chart, take a look at this, right? If we get above 2085 tomorrow and we do prove to hold above this, if we do see something along the lines of a hold above 2085, you are likely going to fill this gap, right here, likely going to push aggressively off 2085 and push higher right into the next level, which is 20,160, right? And 20,160 is this low, it's this low, and it's this low. And you can see here on Thursday of last week, when we dropped 20,160, look at how aggressive that downside was. So if we do see upside tomorrow off 2085, watch out for that 20,160. That's going to be your next spot to watch right there. Over 20,160 is where I think this really gets strong, holds above these previous lows. If we can reclaim these lows tomorrow or sometime next week, that would be the catalyst for the move up into this 20,270. Now, on the flip side, right, on the bearish side, if we wake up tomorrow and we see that the markets are lower off this 2085, we could simply reject here, right, and move right back down to that 19,900, which would continue the channel or the structure that we have been sitting in. So tomorrow, 20,085, major level. Below that, 19.9. You can clearly see the levels here that need to be broken and respected. QQQ, wanted to go ahead and follow up with the QQQ here. Very important reclaim of that 478. Let me go ahead and go out to the hourly chart and show you why 478 has been such an important reclaim on this QQQ. So right here, you guys can see we had that 478 previous high. That is also that hold that came in on Monday at $478 per share. You saw we broke below it, same as the NASDAQ. But what you saw here, I'm going to go ahead and delete this. What you saw here was a very key reclaim and hold yesterday and today. Look at how we turned that 478 level back into support, which was the previous rejection point. So as long as that QQQ is over 478, this market looks like it's holding strong. The next level to watch tomorrow is the very clear and the today rejection level of 483. 483 right here. And today, if I go into the 5-minute chart, take a look at 483 today on the QQQ. Look at how beautiful that rejection was today. That was exactly right here on the QQQ. Another very clean rejection of that 483. So tomorrow, right, we're going to have to watch out for that 483 again. This could be another rejection spot and keep us in that range that we have been trading in. If we get above 483, that is where you will start to see more upside come in. If we can reclaim above 483, we will likely trade into this level right here, which is that 484, 484.30, and above 484.30, we're trading into 487. So tomorrow on the QQQ, 483, guys, that is your level to watch. That is the important level to pay attention to. That is these rejections and the rejection from today. A hold above that level, in my opinion, will get us moving in this gap and likely move us higher towards that 484. And if we do spot those rejections, that could be another fade idea back into the demand of 478. Nice QQQ chart, very clean levels. Make sure you're paying attention to these tomorrow. So guys, before I run, I figured I'd give you analysis on one trade that I am holding and a very interesting thing to be watching tomorrow, and that is NVIDIA at $123 per share. We have seen NVIDIA previously reject this level, and over the last 3 trading days, we have seen NVIDIA maintain that 123. That $123 level is also the daily 20 SMA. This is big for NVIDIA, and this could absolutely create the next long opportunity, in my opinion. However, there is one thing that I will be very open about and make sure you're very clear of. The price action that we have seen lately on NVIDIA is slightly concerning. We have seen a lot of insider selling on NVIDIA, and you can absolutely see it in the tape. You can absolutely see the weakness on the intraday. So this is a little concerning for me, right? I am still maintaining this position. I've taken majority of profits, but I am holding some relatively large runners, still holding 10 contracts. If we break under 123, I believe this is a very ugly thing for NVIDIA. Under 123, I think could cause more weakness here, but I am still very interested in that 123 hold and that daily 20 SMA hold. And my hope, or at least my analysis on the NASDAQ, on the S&P, right, if we do get this breakout on the market, that should help NVIDIA wake up off this 123 level. So really, it's going to come down to what that market looks like tomorrow. If we're getting a breakout on the NASDAQ, if we're getting a breakout on the S&P, my assumption is that a long off this 123 is going to make for a very interesting trade. That's if the market finds strength. Now, same thing on the flip side, guys. If that market rejects and we do see weakness, this could be something to watch for downside. Either way, I think NVIDIA is going to create a very interesting opportunity here. It has consolidated for 2 days here. Not typical to get NVIDIA to go sideways for much longer than 2 to 3 days. There is going to be a move here. And make sure you're paying attention to that 123 level. That is something I would make sure you have on your charts heading into tomorrow. If you want to get more analysis on the intraday charts on individual stocks, guys, you know where to come. Come to that pre-market live stream tomorrow morning. I hope to see you there. It starts at 8 a.m. Let me know what you guys thought about this video. If you liked it, press that like button, subscribe. Let me know down in the comments if you want more. Have a fantastic night, my friends, and I will see you in the next one. Peace out.